All right, welcome everybody to the Bookmap Academy. This is a weekly meeting we do on Thursdays at the market close, as you guys know. What the Academy is all about is it's for you as users, and basically it's free. There's no cost to it. If you go to bookmap.com and then you go to the More button up here, and then Bookmap Academy, it's right here under Community. Click on that. And then there's a process in here that you can go through. Step 1, 2, 3, and 4. It's a roadmap here, and we're giving back in the roadmap. You're basically learning to journal and mark up your charts. For that, we're content with you, very content with that, that you guys are learning the software better. You're creating great content. It helps others. It's a win-win. And then you can work your way up through, you apply, then you, if you do well, you will be invited to the Bookmap Junior Academy. You do well there, that's kind of like a trial ground. Then you can be invited to the Bookmap Academy, where you can get Bookmap for free. Now, the requirements are you just need to post once a day here in the room and also in social media or whatever, but just once a day, and you record it in your spreadsheet. As you get really good with it and you create excellent content, that's when you'll be invited into the Bookmap Academy. That's where you get Bookmap for free. You double the quota, you do 2 a day, 2 markups, then you can get add-ons for free as well. You do well in here, you can become a coach. And the coach, you get data for free. You do well there, and then you're giving back. You're going through and giving feedback back to the Junior Academy members. And then you can become a Bookmap streamer as well. That's the process in here. Let me go back here. We have a process in here. I think I'm gonna skip over this one, but we in the Bookmap Academy, we really focus on number 4 here, your setup. Okay, building out your playbook. You have a checklist. You grade your setup, you determine your sizing, and it comes down to execution. Now you can see 1, 2, and 3 up here are very important to drill down into finding a quality trade for yourself, understanding what's moving the market, key levels, and then you start to develop strategies and scenarios around those key levels, and you sit and you wait for your setup. When a good setup comes, you know what it looks like because you studied it, and you execute. Now the understanding what a good setup is and execution, if you want to do better at that and build out a trading edge, that's what the Bruce's pilot program is for. This came out of exactly that need from you guys, and seeing a lot of the content over the years, and talking to so many different traders over the years. And the biggest gap was that traders didn't have an edge. They could understand the setups, they'd do great with the setups, but they didn't have a process to build out a playbook or a trading edge. And that's a big distinction. We have a structured process in here that'll take you through and build out that trading edge for yourself. It's both quantitative and qualitative, and it's the fastest method and most interactive method I've seen. If you're interested in this, you can go to bookmap.com, click on that More button, and then go to right underneath Bruce's pilot program here, and you can sign up here. Now, you will need to have Bookmap Global Plus. It's included with that, and then you sign up here. All right, so let's go through the disclosures and jump in. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, guys, let's jump in, and let's see here. Who do we start with here? And let's see, welcome John. So we got DNT, welcome DNT, and we got Shark in here as coaches. And let's see who is in here and who has whom. The coaches covered. Boy, yeah, we have Ray in here. I think Laura went through Ray's. Laura is here as well. But why don't we start there, since Ray's been doing some great work, and then we can move on into others as well. Okay, so let's get Ray up here. Hold on a minute. Okay, yeah, here we go. And this is from Laura, and Laura's comments in here. Guys, we'll put these Notion files into the chat later for you, so that you guys can see what Laura wrote in here. All right. Okay. See what Laura wrote. Okay. Let's jump in and bring up Ray, and then we'll start with this one. Okay. And we started a new process. Well, now it's like, maybe a couple months old, where we'll kind of take a look through it, and give some feedback, and then let the trader respond, and then we'll see if other coaches have any other kind of opinions in here. So Ray, you've been doing some great work, so welcome. And I really like the way that you are marking this up here. Like this is structurally, it's really good. You have this market balance range in here, and the break of the range. Okay, so that's really great. Because here, very, very clearly, you can see and start to put together that piece here, that you have the range, you have a break of the range that you mark up in here, and look at all this liquidity getting filled on the way down. Okay, so buyers start to come in, and then we get one more push back down. Where is your position in here? Let's see. Okay, entry right in here.
Yes.
Okay, got it. Yeah, it's pretty aggressive. And there's also some a few things in here that I would just comment on quickly, and then I'll kind of let you explain, Ray. But first off, I think we don't really see that transition yet. It's nice you see this pocket of buyers coming in. That's good. But and you do see the stop run down. That's also excellent. And then you get in here, but we don't really know if buyers have taken it over yet. Now you nailed it, and you can even see that we get the retest right here, and that's pretty typical, that you'll get a retest. The thing is, we just don't quite know yet if there's going to be maybe one more pocket of selling. I mean, we never know, right? But what we do know is when we see the transition, and you can see it's building in here, right? Building, and then boom. But you were in early. It's pretty aggressive, and then we see the move, a nice move on up to this previous drop up in here. Yeah, the other thing is too, I don't know, I mean, if you want to explain why you have this line on here, or also CVD, and yeah, other than that, I'll let you explain. Walk us through the trade. And you are on mute. Ray, still on mute. Alan, good to see you in here. Great to see you. No, still not getting it, Ray. You're not on mute anymore here in Discord, but your mic is not connected. Hmm. Nothing. Really nice trail, Ray. I love the trailing stop. Um, you guys, a lot of you guys have gotten really good at that trailing stop. That is a great skill to have, really. And it allows you to stay in the game a little longer. And I really like our trailing stop methodology of two structures away, because you'll get probably taken out of that one structure if you're one structure or within that first structure. But we stay two away, and then it helps us to stay in the game and let the runners, let this thing run, let this kind of turn over and let this transition happen. So another one, Ray, too, is like the break of structure in here. I don't quite see it yet. It's really aggressive here. Unless you're looking at a tiny little structure, maybe over in this area here, that is broken after the stop run. Other than that, this is the break of structure. This would be the most aggressive break of structure, I think. Boy, maybe there's a structure down here. I'm sure there is, but anyway, maybe you were looking
Good
at that.
evening.
Oh, there you are. There you are.
You can hear me?
Yes.
Oh, super. Yeah, I got the Bluetooth headset. One moment, I have to change to the video of you again. Okay, there it is. Good evening to all. And yeah, let me explain. I took this run because I find it very interesting with the CVD. You mentioned this, and the CVD is showing a flat line or a nearly flat line, but the volume is going up. And I think when I see this, I know the pressure is not real. Yeah. So in this case, I thought to myself, okay, let's see what is really happening. And after the stop run, right after this, I thought, okay, this is a chance. And you said it's aggressive, and it was aggressive, of course, but it worked out this time. And my experience is when I get such a stop run, then afterwards the market is going up again. So I took the opportunity here. Yeah?
Okay. Yeah, I don't. I don't know. I mean, that's not. Is this your own trade, or is this the? Are you
Yeah, it's an own trade,
okay?
but I did it in the replay file for myself, and I saw this in the replay, and then I tracked it. Yeah.
Okay. Okay. So, uh, Ray, are you moving on from the pilot program, or are you adding this in, or what's do you have a checklist for this setup? Have you back
Yeah,
tested
the
it?
checklist is not on the screen. Sorry for this. This was a trouble with my screen setup here, but I used it. Yeah, of course.
Okay.
Of course, I used it. But this was so fast that you really can't do your setup in the checklist right. Yeah.
Yeah. Yeah.
Yeah.
I mean, just to be kind of blunt, and so just
Yeah.
just moving forward, like it, I just don't see an edge in here. We don't know if it works. It's kind of like just a shot in the
Yeah.
dark of CVD,
Yeah.
and I think this is I see some buyers starting to come in after a stop run, so CVD and stop run, and then that's it. Um, and we don't know if it's turned around yet or not. And there's kind of a lot missing, also higher time frame. And so I'm just for
Yeah.
sake of time, Ray, I know you've got a rather thick skin, so uh, uh, this
Yeah.
this
Yeah.
is this is my feedback, and that
That's okay.
the idea is to stay away from well, take only things where you have studied it and you have some sort of edge, some sort of
Mhm.
statistics, or you have tons of experience and the data. And that's actually the key tenets in the pilot program is those two elements. And you put that together and put that into any kind of strategy. I think you've got something. But here, I just see it kind of harkens back to kind of what I was saying in the beginning here of the pilot program of it's another trade, but do you have a defined trading edge or a process
Mhm.
in here? And if you don't, then I think you're just kind of throwing, darts basically. Uh,
Okay. I shared this trait because I think the whole market mechanic, yeah, is shown here, which you normally have on a much higher time frame in just a minute. Yeah. You have on the left above, you have the balanced,
mhm.
then you have the high drop down. Yeah. Then you have another balance again, a short run, and then you have the going up. And I found this very interesting because you have this in such a short time frame, what you normally have over 15 minutes or 60 minutes or whatever. And this was interesting to me. Yeah.
Okay. Okay.
But you are right. Yeah. It is an opportunity slot, and yeah, it worked out this time, but it is a shot in the dark, as you said. Yeah. But
Um,
then the risk management is on my side because you see the dark red level right under. So the stop is very, very short to set.
mhm.
Yeah. And this could work out in most of the times of my experience. Yeah.
Okay. Okay. Well,
I saw some videos of Carmine Rosato, and it's his technique, I think, to go very large positions on such a level. And it's always a type of opportunity slot, what he's doing. Huh? And it seems to work out for him.
okay. Well,
I
he
know you know
he
him well. Yeah.
yeah, yeah, and he has a process. He takes the same setup. He knows it really, really well.
Yeah. 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 Yeah.
This is uh, well, like I said, it kind of harkens back to exactly this and this
Yeah.
quote in
Mhm.
here from my point of view that
Yeah. Okay.
uh, having a structured process for it. Uh,
Yeah. Yeah.
And anyway, I'm going to turn it over to the coaches, and maybe we'll start with DNT. Any comments, or any of you? Just I don't know, Shark or John.
Yeah, I have a couple of thoughts.
Okay,
Can you hear me okay?
yeah,
All right, yeah.
perfect.
Yeah.
Well, I
Fine.
agree with Ray. The NQ is fast. That is for sure. And probably not the ideal instrument to be learning the pilot program. That's one thing. But what I thought was interesting with this trade is the beautiful passive accumulation.
Yes.
coming down. I mean, if this were a TLBA trade, that would be a 10 in my view, because you know, the levels, the liquidity levels are well established. They've been in there for a little while and they get filled. It's not like the market goes down to it and they cancel. So if this is a turn, that's going to be true accumulation. And then there's a lot of it. And so what that helps, and that's why I love that setup, because when I see this look, then my target's going to be north of where they got their where they absorbed in there, where they got the accumulation. So I can't really see this very well, but my last target would be above, what is that, 300, 300, Bruce? Uh,
300 is where
yeah,
here.
right about there.
Yeah,
Yeah.
here.
See, and now if you go over to that highest mark where that liquidity, okay. So what I'm saying is that that's where they, if this is a turn, that's where they're establishing their longs. So if I get long in here, my last target's going to be above that because they're going to try to drive it up just like they did.
Right.
You follow me?
Right. Yeah.
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 So all that liquidity is getting filled in there, which is just lovely. Then it bounces around. So yeah, it's not clear for a trade, and I agree with that. But the takeaway is the importance of that liquidity getting filled coming down, and you'll be able to apply that right when you see the TLBA trade, because that's a 10 to me.
Yeah.
And
Okay.
and then like I said, your last target's going to be north of that if that's true accumulation in there. You follow what I'm saying?
Yeah.
And I
Yes.
think
Yes. I do.
yeah.
Mm.
Okay. And you see that in fact liquidity does come up above near the top of your chart, which would have been yeah right up in there. And so that's an indication to me as to where they're driving this thing. And I'd bet $1 it goes up there. Did it go up there, Ray?
I don't know.
Okay.
Just right. Yeah.
Okay.
But
Okay.
sometimes I think better having 10 times 10 points than waiting for the one time 100 point. Yeah.
Sure.
But
Oh, absolutely. Take the money. I agree. But all I'm illustrating here is how a lot of times this market will follow the liquidity, because they're
yeah.
adding liquidity. You know, when they're buying in here, they're adding liquidity, and you can see where Bookmap identifies where that liquidity is, where that target is for those trades. So that's the only thing I wanted to mention was that
Yeah.
beautiful passive accumulation that's occurring there. So
Yeah.
remember
It's not
what
a
that looks
typical.
like.
Yeah, it's not a trade according to the book. I know
Yeah.
this, Bruce, and
Yeah.
I just wanted to show
Sure.
that the market structure, the whole market mechanic structure, is on a very short time frame. And when we are able to see this, we can maybe have a short edge. Yes.
You see
Yeah.
the difference, like a lot of the trades that I see that are marked TLBA, they'll have just a little bit of liquidity there for a short period of time. And you
Yeah.
can see how prominent this is. And that's the difference. That's what makes this a 10. But that's it, Bruce. Back to you.
Okay. Any other comments, coaches? Going once,
Well,
twice.
I got something real quick. I think what you had marked up on it, what John was saying, all that passive liquidity getting accumulated, and where you drew that trend line, like if we were to identify, and if we could identify a high time frame key level, like this does fit the criteria for the
It,
TLBA,
yeah,
right?
yeah, it does. I kind of glossed over that. I mean, like I saw this. This is what stood out immediately in the chart, and I thought, like, it's a TLBA, but like, wait a minute, where do you get in? And then, and
Yeah.
I couldn't figure it out, and I thought, okay, wait a minute, what is this trade? But yeah, I agree with you guys. Like, it's kind of a beauty. It's a pretty good one. This, like John said, is just fantastic. I mean, look at all of that passive liquidity. I would bet as well. Like once they get back up above here and you see them stepping on it, like it's
Yep.
gonna come up to the top of this range up in
Yep.
here.
Yep.
But anyway, uh, Shark. I'm sorry. Was there more?
No, that was it.
Okay. Okay.
I do like your style, Ray. I like your markup, the text, the boxes. I do like your annotation style.
Okay, thank you. Thanks.
Yes, very nice.
I tried to do my best. Yes.
Okay.
Yeah, thanks a lot for your response. And yes, I'll keep on going. And yeah.
Okay. Okay.
And Bruce, what you are doing is so perfect. Thanks a lot for all your work and what you are doing for us here. Yeah,
Well,
it's very great.
I say this every time. I really appreciate it, and I do think we have a really powerful um, structure and educational path here. It's pretty solid, but you guys are doing the work. You guys are filling it in and learning, and then getting better. Coming back in and learning again, listening to coaches' feedback, and then the next week we see you guys improve off of that feedback. So it's really great. This is just really a win-win, and I think John, you said it best. Like some weeks ago, something about, well, I've never seen this before. Like we're seeing usually is people struggling. And then week over week, we're seeing better charts, better markups, and improvements. And they're
Yes.
not struggling. And they can get better at the process. Yeah, I mean, keep going. And also, like, thank you, coaches. You guys have been just tremendous. So, thank you, Ray. Let's
Yes,
see.
excellent, Ray.
Yeah. Keep going, Ray. You've been doing some really great work. In fact,
Thanks a lot.
it looks like you did put in the trend line in here. All right. Well, let's move on. We have another one here, and let's see which one this was here. So this is a trend line break accumulation. Okay.
No, Laura added that trend line. Yeah. Okay.
Okay. Yeah, so looks like Laura was on the same page here as I was. But yeah, this is I saw this one earlier as well. It's pretty much kind of similar feedback in here, Ray. Draw the trend line in. I mean, I know you kind of have it here, and it's going down like this. But I would say on this one in here again, like there's two parts to this that are really critical. Well, it's really three parts are critical. But the first one is really the passive accumulation. This will work for any setup. So understand the relationship and the context between the passive buyers and aggressive sellers in this case. And then at a certain point, like maybe at a key level, most likely at a key level, there's not going to be any more selling, aggressive selling. It might exhaust out, it might be totally absorbed, but then a structure has to break. In this case, it would be your trend line that is breaking, and you could probably draw a little bit more aggressive one here. Anyway, the structure breaks and the horizontal structure as well, or both. And then we want to see the aggressive buyers come in on the other side. And that is the transition. And you can see it here. When you get those two things, that's typically where these trades work out really well. Because it is transition now. And the structure has broken, and we know that the buyers over here and the buyers over here are now moving that market after that structure is broken. And look for that transition. And really that will work on just about any setup. It doesn't really matter what time frame or what the setup is. This one is regarding a downtrend and then that transition, that break of structure. So I would look for that, Ray. I think that might be helpful. And I would ditch the CVD. To be honest, I think it personally, if you just focus on these three elements in here, this is kind of deceiving, I find. And it's not it's another element to add into the equation that's I don't think is necessary. You'll see it. You'll see it. So that's my feedback on this one.
Yeah.
Any
Yeah,
comments?
it's not a really special trade. It's a typical TLBA. What I found here was the large selling you see on the big pink bubble. Yeah. And there was direct counter rotation, a short one, then the steeper one going down. So I thought there might be an exhaustion, and this was then confirmed later on, where I told the CVD is flat now, and then the run began. And after the first green bar chart, I said, okay, then the buyers are coming.
Okay.
Yeah.
Okay. If you want to, then maybe that's something good to study. Is if you have a bar chart, right? You're looking at candlesticks. Then maybe line that up with passive accumulation.
Okay.
Structural break. See what's happening in the details between the candles, and then because this is what it is. This is what's moving the market, and then put those pieces together, because that bar change is this in here, or wherever the bar is. I don't know what. And I know we see 2 minutes here, but anyway, when you see this within the bar after these things, I think you got something. That's my take on it. Coaches.
Ray, I think that if you spend some time synchronizing your eye to what you see on the main chart and what the CVD is telling you, I think over time, with screen time, you'll be able to get everything you need off the main chart, and you may not need that CVD.
Okay.
Because of the mathematics that are involved in presenting that line to the screen on the CVD, it's going to run behind a little bit. And like you said when we first started this meeting, these are fast moving markets. And if you're behind, you're on the wrong side. So I often look at these things that Bookmap comes up with, and then I always try to say, okay, well, what is it telling me that I can't read off the main chart? And so I've been able to just cancel out the CVD off my charts, because I can read the main chart and get what that's telling me. And I'm going to be faster. My reflexes are going to be faster. The information's going to be faster getting to me before that CVD changes, before there's an indicator there. You follow what I'm saying?
Yeah, I follow.
Okay.
Yeah, sometimes I struggle a little bit because in the map, and in the main heat map, you don't have all the dark lines, which or there is a black space. Yeah, and then I try to find out, is it now is there liquidity or not? And then the CVD may help me just to find out if it is a right move or maybe a fake move. Yeah, is there real aggressive pressure behind it, or is it not? And that the CVD shows me.
Okay.
Yeah.
Well, I mean, if it helps you, fine. But in my work, if it's aggressive, like you say, I'm going to see it on the main chart, and then that's
Mm.
the only point I'm making. But anyway, the least amount that you need to process, at least in my feeble-minded head, the better, right? The less I have to worry about, well, is this doing this? Is there a confluence here? If I'm reading that chart, pretty much I know what the CVD is doing. So, but that's
Yeah,
just my
yeah, yeah,
take. Bruce,
yeah.
up to you.
Yeah, yeah. I mean, that's. I mean, you guys have long heard me talk about that. The. I mean, for me, like I just been duped so many times by looking at the CVD and then trying to align it up and going, yeah, yeah, I see it, and then I just get annihilated. Um,
Yeah.
and I'm just so tired of it that I this is telling me more. And then I think John, what you're mentioning is a really strong point. Is that if you're tuned into uh, fewer elements like this, and these are the truer elements I feel that move the market, your execution is going to improve. You're going to be quicker.
Yes. Yes.
And that is an edge in itself.
Yes.
So
Yes, sir.
that I don't know. That's my take on it, on
Yes.
lines on a
Agree
chart,
completely.
etc.
Yes. Yep. Yep.
Yeah,
Uh,
and you are so much more experienced with all this. But I see on myself now, with my screen time gaining, I see that people are able to see the rhythm of the market. And I think that is what John meant.
Yeah.
He sees it. Yeah, he sees the
You feel
rhythm.
it.
He can
Yes, sir.
scan it. Yeah, and he get all what people need. Yeah.
Yeah.
Absolutely. I mean, look in the audience right here. We can go through. Look
Yeah.
at Nan, Tomi, Vinfra,
Yeah.
uh,
Yeah.
uh, uh, Bob Ford, Taboho, Likay, all of them, Becker, are all putting in the replay repetitions and seeing
Hmm.
it, and then just getting good at it, and that's it. If
Yeah.
you know, we had this discussion, really good discussion. I think John took some trade months ago, and it was at the close, and there was a discussion about, well, you know, he's an expert trader, has been trading a long time, and then I kind of came in and I said, you know, I disagree that, like, if you know what you're looking for and you study that, you could have traded the same thing, and you just shorten the curve by years potentially. So again, it comes back to following the process, and getting good at it, and then your execution and your recognition of the pattern is very quick. I mean,
Yeah.
I you know, let you guys describe it. I think you know, these guys that I just mentioned in here would probably, probably agree with that. At least I'm seeing it from them. So you know, it's been great work. And Ray, you're on the path. You're doing it.
Okay. Thank you.
Yeah. Oh, absolutely. So I might have seemed kind of harsh. It's not. I mean, I think you're doing really great work. I'm just trying to help as quickly as I can.
Yeah. Thanks a lot again. Yep.
Yes, sir.
Yeah, yeah, great work, Ray. So keep going. So let's move on. And thank you, Laura. We'll put this into the chat for you. That was from Laura. And we actually have another one I want to go over, who's been doing just outstanding work. It's also from Laura. Is Tomi. So, and Tomi's in here. So let's jump in, and let's see. Tomi, we'll get you up on the stage.
Ray, check out the markups from Laura when they post the Notion file. She got some good markups for you.
DNT, I can barely hear you.
Oh, okay. Hold on.
So
Whose markup is this? Is this Laura's or
this is
were-
Tommy's.
But
But
who did it though? As I'm asking. I'm trying to find the Notion file. Okay, I got it. Thanks.
boy, I don't know, Laura. Which did you mark up some of these yourself and then paste them in? Anyway, this is what I got. Tommy knows. He knows what he did or didn't do. So Tommy, welcome. And I think we might have gone over this one before. I could have sworn we went over this one or something very similar. Trendline break accumulation.
Yeah, I think this one is from 2 days ago, so I don't think we've been over this one before.
Oh, okay. It was very similar to this because you trailed your stop up really quickly and then got stopped out, and then we had a good discussion about it. And I know you're trading a prop account, and this is a good way to reduce that risk on that prop account. Let's see, you had previous day high here, so that's what you were looking for your key level here, and then you have the 930 cash open, drive down, and then you see the kind of transition to buy side in here, and then yeah, you jump in when the structure breaks, and then got really aggressive with your stop and your take profit too. Very humble, nice though, right at the cash open up here, and you got liquidity. You're front running liquidity and everything. Looks good. I'll just let you go through it, and then let's open up the discussion.
Yeah, I mean, the reason I got out of the trade is because you can see the sellers coming in, and I saw the two bands of liquidity just below the price. And I don't know if you see my target, but I think like price went up to my target and I just didn't get filled. It's really close to my target. So, and I saw the sellers coming in and I saw the liquidity below, so that's why I decided to exit my position. So yeah, but you can see the passive accumulation. I mean, it was pretty good. The trend line wasn't really big, but I saw the 3 levels of passive accumulation, and the transition is there. If you check the size of the delta bars, you can see that the bullish delta bars, like they're similar in size. So I think that was a good transition, and I saw the liquidity just above the price as a potential target. So probably all those guys who got filled, they pulled their take profit there. They wanted to get filled probably up there. And yeah, I just saw the sellers coming in, and that's why I decided to exit my position.
Yeah.
But that's really it. My key level was just previous day high. Cash open was really 7745 was cash open. So that's kind of like a key level as well.
Yep.
So yeah, but I think I got a bit like unlucky there, but that's really it.
Hey, I think that's great. I mean, like, it is aggressive, and you are aggressive. But you manage the risk. You had your reasons. You're following a process, and there's going to be a lot of trades like this. It's just this is the nature of trading. One thing that I would mention, Tommy, is use that setups checklist and grade it. The more, because we've seen this a few times now, of being able to get into the nuances of the setup and the trade, and then that's going to come through the grading. And then your grading is going to get better. It's going to be kind of subjective. There's no other way that we can do it. We've gotten lots of questions over the year or months about like, well, how do I know it's a good setup? How do I grade it? And it has to come from your experience and being able to identify what makes a good trade or a good setup, and then that might help a bit. And just put it this way, I think it would help for in general for everybody, because if you otherwise you might kind of, you don't know if it's a good setup or not, and then you take these trades over and over and over again. And Tommy, this isn't a criticism of you. I'm just saying in general here. And then it'll take a long time to get through the process to go like, yeah, I don't take that trade anymore. It's like a C trade, or like a 7, or or a 6, whatever it is. And then for that reason, you won't take it. So because you're in nuance land right now, getting into the nuances of it and really building out that edge. So that would be my suggestions. Coaches, any comments?
Tell me, what is the key level? Is that previous day's high?
Yeah, previous day high. Yeah.
Okay. I think you continue to demonstrate great awareness. At the top of your chart, you're showing all the liquidity that's been in the market. And then you have liquidity below that at 50, 77.50. Liquidity again a little bit below that. So the imbalance of the liquidity is above the market versus below. But you had that huge band up there. You're coming down on yesterday's high, which oftentimes they'll check that level, and then you're looking for an advance up. But I just think your awareness of that is outstanding. And yeah, and I agree. We are just a little bit unlucky. That's these markets, and that's just the way it is. And you multiply that by 20 if you trade the NASDAQ, which is just nuts. But I think you made great decisions here. You brought your target down where I think it should be. So there's a nice consistent 5 points that you can usually achieve with this setup. So I thought it was nicely done with the decisions that you made. Did it just go sideways from here, Tommy? Do you remember? Or
I think price ended up going below the. I think it went into the liquidity just below the
fell off?
trend,
Okay.
yeah, the trend
Okay.
line, yeah.
So it tried and failed because you see the sellers starting to come in, and you lose that transition on the buy side. I mean, it really didn't build off of that, which again, you were wise to bring your target down and not try to challenge that 77.50 area, because you do see the volume. Once you see that transition, what you're looking for is a follow through, and you want to see it come in and just really take off for you, and you just didn't see that, and you made the adjustment. So I think you made a series of really good decisions. Well done, sir.
All right, thank you,
Bruce.
Yeah, no, great stuff. Any other comments? Oh, okay. Oh, Shark, go ahead.
I think there's room here on your screen to just open up your x axis and y axis a little bit. Make it easier to see the whole trade in a little more detail.
yeah, I'll do
And I
that
was going to
next
mention this. And I was going to mention this to Ray as well. It's really good to come back in hindsight when you look at these, to be able to see what price did after you covered trade.
Yeah, that's a good point.
Excellent.
It's hard to hear you, Shark. Your connection's pretty bad.
Is that better?
A little bit better, yeah.
Okay, sorry about that.
Yeah.
No, just excellent trade. Good work. Thank you.
Yep.
And Tommy, again, like, just compliment you on your work ethic here. And something like I see a lot of other traders dealing with over time is you're focusing on the right things. and doing the right work, and it shows here, with your trade management, for example, and it aligns with your prop account, which is important. It's a different way of trading. So and this goes back maybe a bit to what Ray, feedback with Ray, about the focusing on the right things and not being distracted by other things, and then you get really good at those things, and you get traction, and you have gotten a lot of traction. So your improvement in performance has really gone exponential, and now you're really into all the nuances, and continuing on, and that's going to continue forever. You'll never stop doing the nuances, but you'll just get better and better at it. Really, complimentary on this. Great work.
All right, guys, thanks for the feedback.
Yep.
Yes, sir.
Let's see. Got a couple more in here. Okay, this one I think was during the webinar. I did not take it, and you did. So let's go over this one. And I was kind of on the safe side, and I didn't zoom into this, I think. I remember this trade here. And you do have your setups checklist, and you didn't grade it, though. But like, the passive accumulations, it's good. It's very good. I thought we would kind of chop around in here before, and there's just a small structure up in here. We do see the transition, though, unfolding in here, and you got in down here, where I thought we'd get a bounce and then come back, and then I thought we would break. But I think you did a great job. I didn't take it. And then we look back at it later, and then this was the smaller kind of structure up here. And then, I think if you look at something like that, you'd probably get in like even here, somewhere around in here. And it's also a very aggressive trend line. I know it's, this is 930. But that's fine. I think for me at least, the measured move after something like this is, I'd be taking some profit probably down where you got in, or something like that. But like due to that smaller structure, and it's more aggressive. But like anyway, like I didn't take it. I didn't really even kind of see it until later. You guys in the webinar were pointing it out. But you took another great trade here. You were on the right side. You let the momentum just take you out down here. Good to go. Look for the next setup. So this one, like you're following the same structure or process. You aggressively moved your stop down, and you didn't even get challenged on this one. In my opinion, it's because of all of this in here, right? It's all of this in here, like you mentioned, and that kind of momentum is going to retest some of these areas, and you just wrote it right down. So nice work, Tomi.
Yeah, so the only thing I want to add is that the reason why I didn't enter earlier is because I don't like to enter when the bid is that heavy, because oftentimes you see prices going into that bid, and then price just bounces back.
Yeah.
So I wanted the sellers to get through that area, and then I actually didn't have like good liquidity to target, so I was looking for the low volume pullback, and then I just ended up targeting the liquidity band. Like I was actually front running that liquidity there. But I just don't like to enter when liquidity is really heavy, because buyers can step in, and then I just get stopped out really quickly. So yeah, that's why I just want, I normally I want sellers to get through that area, and then I want low volume buying, and then I enter and target heavy liquidity. So that was my thought process there. So yeah.
Yeah, nice, nice. Yeah, great point. Coaches.
Yeah. One thing, tell me, and you're right, once you get in that trade, there's not a lot of liquidity that you could really pin to. In those situations, oftentimes you can look over to the left and see where liquidity was, because a lot of the times the market will put that liquidity back in. They'll add it back in. So if you don't have anything, you can look back, especially at that 78.10, and you can see where they added it back in. So I find myself a lot of times, especially in a thinner market like the NQ, where the liquidity is not obviously there to the upside, but it was before. And so oftentimes you'll see that get added back in. For whatever reason, they'll add and take out and so forth. But that's one thing that you can look for if you don't see anything else. You follow what I'm saying?
Yeah, makes sense. Yeah.
Okay. Just a little, like I said, we talk about little tits and bits, and that's just one of them that can be helpful if there isn't anything else there. But you have volume there, so I don't blame you for getting in. That's great. So yeah, that's all I really wanted to add. Yeah,
Yeah.
exactly.
Yeah, actually, like we had like a discussion before where I was asking like, because when I'm grading the setup, like heavy liquidity as the target is not as one of it's not in the list. And I was
No,
asking
it isn't.
people, yeah, I was asking people if they like to target heavy liquidity, or if all the, if you look for the 4 points and you get like like you get 10 for each, then would you be happy to target like previous swing lows, or like would you look for heavy liquidity all the time? And I was actually asking this in the pilot program chat, and I know some people said that they always look for liquidity, but it's not technically in the setup, so you might decide to just target like swing lows, or I don't know if I don't know what you guys think about this, but I like to target heavy liquidity as my target basically.
I agree with that. And these points that you're mentioning, previous highs and lows and stuff like that, and even VWAP. VWAP becomes important to me if there's liquidity there. If there isn't, it's another line on the chart. That's how I view it. So
Yeah.
I because I see it over and over again, because large traders need liquidity to engage, and it just acts as a magnet a lot of the times, and we see that over and over again. Bruce?
Yeah, it's uh, a good point. And something about the setup to mention this, when developing this program, I really wanted to try to keep it simple, and with Shark and Laura and DNT and Trading is Life, we talked about this, and just keep it really simple. Like, just these are the elements in here for the setup, and the trade management's not in here. But I think, and it's a little bit convoluted for this one, because a lot of times what I see is not necessarily a reversal, but like on a higher time frame, the trend line break accumulation is more like a pullback on the higher time frame. So it's there's not much liquidity down in some of the areas. So a lot of times it just kind of is, you're actually in essence trading a higher time frame pullback, not necessarily a reversal. It's a lower time frame reversal for sure. So and why I mention this is because if we look at, for example, a reversal like on the way down, and then if it's, you see your break of the trend line, and then you see this, or the accumulation, and then it moves, but it moves up to here and kind of exhausts out. There's not necessarily liquidity up here. So because there's more liquidity down here still, a lot of times. But if we see the aggressive accumulation, we're looking for it, right? And then you can target these areas up in here. And then it depends. Sometimes we get something like this, and then sometimes it goes back down. Other times, you get this move, and it is in line with the higher time frame. This is actually the pullback, and you hit that key level, and you get this, and then you really get a move, right? And it goes like the NASDAQ hundreds of points, in S&P, I don't know, 20, 30, 40 sometimes. So that's maybe I hope that sheds a little bit of light on some of the confusion, some potential confusion there.
Mm-hmm. Mm-hmm.
Yeah.
Okay. Anything else, coaches?
Since we're just on, can you hear me good now?
Yeah.
Yeah.
Okay, cool. So since we're on the topic, did this trade come after? Was this trade before you asked that question to the pilot program? I remember you asked it like maybe 2 days ago.
Yeah, I think this one was just before. I think this was like a week ago, maybe. I don't know.
Okay, yeah. Oh, I see. Okay, that makes sense. So that's why you were asking that question, because you're asking that question because this is a good trade that I don't know if you took it in live or not, but you're probably conflicted because you don't have that liquidity to target. And so and this repeated itself over a week or so, you're saying. So that's why you want some to see what other people thought about that.
Yeah, yeah.
Yeah, makes sense. Yeah, it's these four elements I think are right are really spot on. I really like these four elements because they work with supply and demand concepts very well. I think had talked about these a long time ago, and I don't think you were here at the time when I was talking about them more often. But um, these concepts that Bruce has built into this setup are really the keys to the market and the auction. So, and sometimes you'll even see the market going up into all that passive liquidity, but still continuing up higher and higher and higher. So yeah, you can try to read the auction and stuff like that, but it's kind of you kind of just have to take the trade as you see it, and whether and you said you're grading your setups now, so um as you start to grade your setups more, you'll start to see if well, actually, I don't know, this you gave this all tens, so have you started grading your setups?
Yeah, I mean, in this one, I actually I actually think this was like an A plus, because if you look at the passive accumulation, you look at the key level, and I kind of I didn't have like an initial target, but I kind of ended up taking the low volume pullback, which is A plus as well. So in this one, I actually think this was an A plus setup. So that's why I decided to put in like 10 for all of the points. Yeah.
Got you. This was more like a low volume pullback almost, huh?
Well, it was the trendline big accumulation, so I had all those big players like on my side because all of those guys got filled. So if those people want to make money, they have to bring the price down. But I didn't have like a great entry, and then I was looking for a low volume pullback, and then some liquidity actually came in on the bid, and I was like, yeah, I can just target that. But initially, like I like to target liquidity, and if you look at the order book, you don't see anything like around I don't know, like just where the trend line started going up. So I usually when I take this kind of trades, I want to see liquidity just where the buyer started like stepping in. So that's like a full reversal and that's like higher probability. But in this one, I'm just looking for the low volume pullback. But the thing, like the really nice thing here was the passive like players backing me up, because all of those guys got filled, and
Yeah.
those people want to make money and they have to bring the price down in order to be in profit. And then I that's why I like this. And then my entry was just based on low volume pullback. So yeah.
Yeah, it makes sense. I know what you're saying, and when I sent a reply in the academy, hopefully that made sense as well. I'm not too sure. I'm usually the odd
Yeah.
one out, so okay.
Yeah, Tommy, again, I mean, like listening to your replies here and the nuances that you're talking about is fantastic. I really encourage you to get into the grading, so you really know what you're looking for, and because the like right now, I imagine and I hope right now you're not doing like asymmetrical risk or a sizing. It's kind of you're using the same sizing again and again. Uh, Once you get into the nuances and understand the nuances really well, then you can start betting more on a good setup because and
Yeah,
you'll probably pass on some of the ones that aren't as good.
yeah, I mean, the only thing I want to add is that because I'm only looking for like A plus setups, I don't know if it makes like much sense for me to grade all my setups because like if like everything that I'm taking should be an A plus, and even if I would like even if I grade my setup and it's like maybe like 30 or 25 or something like that, I shouldn't really take that. So I don't know if I mean obviously it makes sense, so I can say if it's like an A plus setup, so I can go through all the points. But if it's not an A plus, I'm not really interested in taking it, to be honest. That's just the way I think about it. So
I agree with you completely, Tommy. Grading your setups is great education. Trading is a binary decision. Am I in or no?
yeah,
Long or
exactly.
short?
So yeah, that's why
Exactly.
because even
Exactly.
if I
But
get like 25 or
grading is
30 out
good.
of 40,
Yeah, grading is good for your education, so you can pick out the pieces that may not fit into a perfect trade. But the trades you take, absolutely, that's what you want to practice on. Yes, sir. Bruce, sorry about that.
Oh, no comments. It's just again, this told me you've built up this through experience, and getting into the next steps and knowing. I mean, absolutely. Like when you take a trade, it's like it either works or it doesn't. It's 50-50 at that point. We don't know, but we have studied it in the past, so it gives us some sort of edge that we know that it typically, in terms of probabilities, works out to our favor. But we never know. It's always roll of the dice, literally, or basically. Um,
yeah.
all right. I don't know. Any other comments, coaches? No.
Yeah,
Great
grading
stuff,
might
Tommy.
not be too important to you now, but it might eventually become more important. So yeah, it's just it wasn't that important to me for a really long time, but I think it's becoming more and more important to me now that I actually have a process and I'm starting to get into the flow of like review and tracking and stuff like that. But eventually, it might come. But yeah, keep doing what you're doing. I think you're doing a great job.
Thank you, DNT.
All right. All right. Thank you, Tommy. Great work. And let's move on. Let's see, who else do we have here in chat and in comments? Okay, great, great. All right, so we've got none of the coaches in here. Gosh, hold on a minute. Maybe we can find something. Okay, yeah, let's do this. Taboho, you will be on deck. You'll be next. We'll go over Nan because let's go over because Moby covered your trade Taboho, and Moby's not in here. So let's get from the horse's mouth here from the coach and take it from there. So let's add Nan to the stage here and. Let's have DNT go through and give some feedback here.
Oh, okay. Let me see here. 1 second. So this was Scaparoni, I think, right?
No, this. Oh yeah, you're right. You're right. Here's Nan. Yeah.
Okay. All right. What did I say to Nan? How you doing, Nan?
Yeah, pretty good D&T. Hi, Bruce. Hello, everyone.
Hello, Nan.
Okay, so I don't have too much to say. I mean, your trades are all your replay trades are all really solid. Um, I noticed when I was going through a few of your replay trades, you consistently hit like about 8 to 10 points almost. You hit it pretty often. I don't know if you realize that you hit that 8 to 10 points pretty often on your trades, even though you enter relatively. I mean, this was a good entry here, right? But sometimes on your trend line break accumulations, you enter late sometimes, but you still often hit about 8 to 10 points. I don't know, is that do you track your take profits, or do you track how much points you get, like, on average?
Yeah, I think you're right. That average seems to be about around 10. So yeah, that is. I don't particularly look for that target and taking a trade. It's just that I have some that are 4 or 5 that I've posted even this week. But
Mhm.
yeah, the trendline break accumulation ones. My entries are usually on the later side because I always look for the pullback and wait for the liquidity sweep. With the low volume pullback, that was a little more, I think, clarity in terms of getting in once volume has returned after the small break of structure. So um, my tendency is to get in earlier with the um, low volume pullback. Yeah.
Yeah. Yeah, I love the low volume pullback. I think Bruce did a great job with it. I think it really helped minimize risk, and the low volume pullback, and the way that Bruce has put it together really accomplishes that, minimizing risk. Whereas the trendline break accumulation, I agree with you. It is difficult to kind of get it sometimes, and so you wait it out, and then you take your entry. Even though it's late, you still seem to always pull off like about 8 to 10 points. But you try to minimize. So you seem to always favor minimizing risk, right? It seems like.
Yeah. Well, yeah, I mean, the trade management is important. So, depending on the overall context of a trade, I mean, trailing, can for me can be anywhere between 6 to 10 points of trailing.
Yeah.
Not more than 10, and not very often, but my average is around 6 point trailing. And then a lot of times I get stopped held because I trail up to the previous structure, and I just wait there and look to see what's going to happen, or whether I exit if momentum dies. So yeah.
Yeah, I know that's exactly what I was gonna bring up too. Your trail is wide as well, which I also kind of admire, because you on some of your other trades. This isn't an example of that, but yeah, you keep your trail looser on some of your other trades as well, which kind of gives you a little more room to breathe. Um, I was curious, have you ever thought of using two lots or two contracts? Maybe one to target maybe like 8 to 10 points, and then using another as a runner.
As a runner, no, I have not practiced that, but I mean, I think I can integrate that pretty easily with some practice over time. So no, I just try to feel out the entire environment to see. what's the maximum move I can endure in a particular setup. And again, it's all based on the strength of the setup, whether we have a clean break and how the structure is formed and liquidity that supports it. Volume has a big role to play in the duration of the move. Like in this one here, we see a domination of green delta bars. So, I mean, when you have this, it makes it easy to stay within the trade for a longer period of time.
Okay, yeah, because I asked because you've been doing replay. I thought you had more trades than this. I thought you had more than 150, didn't you?
Yeah, actually, this I have a total posted of 100 and well, actually, it's 200. So the
200,
150
yeah.
the 150 we're looking at is actually up to 157 on my last posting earlier on today. So that's my
Yeah.
own personal replay file. And then Bruce's file, I did exactly 50. So it's 150 plus Bruce's
Ah,
file 50. That's 200. And it's actually 207 total right now.
okay, I see what you did. Okay. Yeah, because you do a lot of replays, and I think I don't know what Bruce would say about this, but since you're constantly in this replay mode, I just I can see that you might I don't know, like, since you're trailing, it seems like the goal of trailing and extending your is trying to squeeze out as much as you can out of the trade, and I think that one of the better ways you might be able to do it, since you're so experienced, you have so many trades under your belt. It's not you're not a beginner anymore. You're not, you're beyond that, and trying, and since you consistently get 8 to 10 points or something, maybe if you put one there and then kind of do your trail thing with your runner, as you're kind of been doing with this single lot.
Yeah, I'll certainly look to implement that here in the coming week or weeks. That's a good piece of advice. That's a new addition to my training, so it will be a good
Yeah,
thing to experience.
you're a replay animal. You are an animal when it comes to these replays, and I don't know. It's just inspiring. I think you might get something out of it. You might not, So you'll be the one to gauge that, I think.
Well, yeah, having replayed so many files or postings, it does bring some experience that you otherwise will not, get. And there's perfection and then there's excellence, right? So I'm more on the excellence side, and I enjoy doing it because I learn, and there's so much variations, there's so much unforeseen market movements, but the objective of understanding and reading order flow is becoming more easier for me now. So I think the experience for me speaks more than itself. And writing up the chart is just for me one part of the equation. The other half of the equation, I would say, is writing it up. The narratives that I write up. Because when I sit down, when I draw the chart up, that's just half the task. When I sit down now to write it up, it's like, well, how do I justify what I just traded there? And that exercise itself brings additional clarity. It brings additional awareness that I otherwise will not just get from playing the replay files, marking them up and posting them. So yeah.
And that you're the pre-trade, the contextual thing, the pre-trade, is that pre-trade or post-trade? What were you talking about just now?
Post trade, right? So
Post-trade.
the
Okay.
when I post my charts, I usually have a couple of paragraphs of narrative that I write up as to
And is
explain.
that in live?
Yeah.
Is that from your live trades, or is that from?
All
Is that
trades.
from your? That's from the replay trades.
The replay, yeah.
Wow. Okay. And do you trade live? You said you trade options on.
I do.
Yeah. Okay. Yeah. Very cool. I mean, it is going to be a lot different in as you already know that, but I mean, it is a lot different in live than replay because there's a lot of different mental aspects and other things like that, and real risk, which changes things up. But I think that the when you have two contracts, it kind of, and you get one off, it kind of relieves a little bit of mental capital. I'm just, it's just a thought. I mean, I don't know what Bruce would say or not anything, but I'm curious what he would say actually.
Yeah, I have instructed or part of the process. We talked about it many times. In it's Nan, maybe it's a little different due to your experience now, but one in, all out, because otherwise what happens is you don't really pay attention to the entry and trade management, and you get sloppy with it. And otherwise, like, feel some of the pain, feel it go against you. How do you handle it? Instead of like buying, back into it, like, average costing it, and then taking some off, and learn how to trail the stop instead, and feel it get stopped out. This is invaluable, I think. And Nan, if you don't feel, I stick with one. If you don't want to, if you don't feel comfortable about integrating that in, I agree with D&T about maybe now taking this into forward trading or live sim when you're ready, because you've got lots of experience. So there's that. I do have some other comments, but I just wanted to mention that about the one all in, all out for trade management.
Yeah. Okay, Bruce. Thank you for that.
On the other hand, regarding, I'll just sorry, D&T, complete maybe that thought. I totally agree about the things are different, and there's going to be pre-market routine, and there's going to be, like, what are you anticipating? What scenarios do you have outlined? And what are you looking for? And when are you looking for your setup? And these things will come in and present to you live, and then being able to identify that live is part 2 of the pilot program, phase 2. So getting really good at first you identify it in replay mode. You see the nuances in replay mode. You mark up your charts. A note on that quickly. Marking up on the charts is just excellent, Nan. And it just, what you just outlined was just beautiful. But more articulate than I can say. It's with intention. It is you're using it to learn from. You're building out a playbook. When we see this from other traders, it is typically they learn much faster. John still marks his charts up like this. So it's just excellent. And when he first started marking up his charts, it really stood out that it was very precise and with intention, and it worked as a tool for him. So you're doing a phenomenal, exemplary job there. But we'll get into the other phases of the program soon. I'll have those materials for you guys in this website, and there will be other elements to start to weave into the picture here. So anyway, Maybe I'll just keep going here on this setup. What I saw here, Nan. I mean, everything's excellent, and I love what you mentioned about the volume, especially a break of structure on volume. I mean, that's what you need. And look at the move away. Look at the pullback. The pullback is beautiful. You got your low volume node, right to it. And this is going to be a stop run in here too, right below this little structure. Comes back up and you get the buyers coming in. You even see it up in here. You get in, you get a small pullback in here, and then you get a beautiful move, expansion move here. Really nice, very precise skew, everything. You've got it all marked up here with just a few markings. And I think it's very precise. And with that kind of intention, helps you learn much quicker. Sorry, D&T.
No, that's pretty much it. It's just so one of the things. The reason why I mentioned it was because we trail oftentimes to get, I think, as much as we can out of the trade. And there can be a fear and greed aspect when it comes to it too. When we enter the trade, we should know what our target is, and we oftentimes, when it gets to our target, we extend our target, and then that's a greed aspect of it. And then when you're trailing your stop in Bookmap, you can see your retracement of you tracing your stop, so you can actually see your fear in your stop sometimes. It's not necessarily like we should have it planned out, trailing behind two structures or one structure, whatever it is. But we oftentimes can see our own fear in our trail. So when we're trailing, I try to observe that. I'm not talking to you non specifically, but I'm talking to all of us, even myself. Like, this is the great thing about Bookmap is we can see the fear and greed in all of our trades, and part of, I think, trailing is to kind of squeeze as much as we can out of the trade. So that's why I made that recommendation. If you wanted to try and squeeze that extra piece out at the end, then you can try that with the second contract. But that's all I had mentioned. That's all I really why I wanted to mention it. That's pretty much it.
Okay, coaches. Any other feedback?
Well, you took most of my bread and butter, but I do have a couple of crumbs.
Sorry.
Nice job by you identifying the tight range, Nan, and then a move away from that structure on good volume, and then a nice retracement on less volume back to your low pivot node. Very nicely done. You draw a little trend line in there, and as that's developing and as it breaks that trend line, you can look above and you can see where they're adding liquidity at 70.70. Bruce, 70.70. See how they're adding liquidity just about as that's exactly right. So at the start of the breakout to the upside, you see the liquidity above at 74, and now you see they're adding it. And when I see that makes me more interested to the upside, and I think you probably saw that. And then you can see how the market reacted to it. It really starts to go after that liquidity. Volume comes into the market and carries you right up. So, great decisions as far as this trade. It's a beautiful trade. And, the markouts, they are tools. And I'm sure you use them in real time. I know I do. So when it comes time to post my charts, they're usually done. I highlight them a little bit with a third-party software, but for the most part, they're done. And then in part, as long as you're in the pilot program and practicing, your best practice time is going to be all in, all out. When you go to multiples, which is good trading, very good trading, I think that your preparation time that you spend in, all out, will better prepare you for going to multiples, because trading multiples are easy. Takes some of the heat off, and it takes some of the risk off when you're taking profits. But I think it's a good use of your time, and I'm glad to see that you're staying with that, all in, all out during your practice time, because that transition to multiples is going to be really easy for you. You're going to be very well prepared when that time comes, and exceptional trade management here. And I think the reason why you're developing that great trade management is because that all in, all out is forcing you to do so. Bruce?
Yeah, nicely said. Shark, I'm sure you have some comments on that. If not, I'm going to mention you in a comment.
No, I think everything was said. Great trade, great markup.
I don't know, Shark. You have talked about this in the past. I recall the difference between, and John just mentioned it. You articulated it really nicely some months ago about there's a difference between replay and education, and going to the gym and then also being in the live market. So there's trading mode, and there is kind of replay mode.
Yeah, learning versus performing, right?
Right. Okay. I don't know if you wanted to
Yeah.
anything else that you want to share that you
Well,
learned
I
from that.
think replay is a fantastic. I think replay is just a fantastic tool to just be 100% in learning mode, right? We have the file loaded. You can hit that replay multiple times. You could come back to just the entry, trailing of the stop. You could try it different ways. You could, leave the stop alone. You could trail the stop tight. I kind of like to do multiple replays of the same price action
Yes.
rather than just one and move on. The file's loaded. It doesn't take long. You can speed it up. You can slow it down. And my goal is to work on my execution, right?
Yes.
Just the connection between my brain and my mouse hand and the price ladder, and then just dial that in so when it's time to perform, some of that stuff comes natural, right? Those movements on the, right click, left click, up and down on the price ladder, some of that stuff becomes more natural in the moment than having to think about it.
Yeah. That's a beautiful, Shark. That's great stuff. All right, guys. Should we move on? Let's see. Hold on a minute. And we just had one from Nan. Scalperoni has been doing great work. He's not in here, so let's go over to Boho. He's on deck, so we are ready to go. And minute. All right. You know what? Why don't John, if you want to, since Moby did this, maybe you want to take the reins here and go through your feedback on this, or do you want me to kind of kick it off? John, you there? Okay, well, I guess I'll jump in. And Taboho, let's bring you up to the stage. And again, Taboho, really just excellent work you're doing. And all the things that we talked about, like you're doing all of them, and it's fantastic. And this is a forward testing. You're in forward testing now, and love to get your take on it. So we'll hear about that. Let me go through this. Okay, structural break, and then your impulse move. You got a range in here, and then you got your break here, and your entries here, right when it starts to break through that structure, and then you aggressively move your stop down here and stopped out at break even. Yeah, this is a tough one. I think and forward testing, and this is where, like, DNT talked about it, and where there's the nuances, or recognizing the setup in real time is different. Yeah, you did get this structural break here, and you got this move in here, but you're still within this, is what I see. And these guys are still kind of in control of the market. In fact, we've just retested back, a little bit below it, as you can see, but not much. So the idea is then, if the setup that I see, if it's a low volume pullback, and I don't really see, to be honest, Taboho, I don't really see a good one. But the low volume pullback of that break of structure is here, right? And it retests back to this, and then the selling comes back in again. And you don't see too much selling here either, which isn't good. But you see the break of it, and then more selling coming in. That's where we're looking for it, back down to where those buyers came in, previous liquidity, or low of day, or whatever it is here. It looks like low of day. So I don't know. That's kind of what I see. And I do like that you see this range in here, and you do see this. This is more of like a breakout type of trade. Then I see it more like that than a low volume pullback. And you grab it, and then you very aggressively start moving your stop down. So we'll start off with that. And Taboho, welcome.
Thank you very much, Bruce.
Yeah. So what's your take?
Yes, I think this was influenced more by the time of day. It was approaching a European close.
Okay.
And I have experienced a few times that at that time there are usually big moves as we move towards the European close. And this is why I traced that range area there, as you can see, because I was really looking for a big breakout, and I was seeing the liquidity at the bottom, and I was looking forward to that liquidity being taken. Yes, exactly, that liquidity. So that's what I was targeting. But then immediately after my entry, then there was that seller exhaustion, and I could see that the move was not going to happen, and I then aggressively trailed my stops, so that at least I break even of the trade. I must admit that this is not one of my best trades I took, especially because of that long range. That area of balance that the trade moved in. In fact, this was my first time attempting this kind of trade, and it was not a good experience of this. I usually prefer a clean pullback, retest, and then it goes down. But it didn't do that this time around. Yeah.
Okay. I'm gonna just turn it over to the coaches. Any comments, coaches?
Well, the time of day explains the high liquidity coming in, the skew coming in between 77.18 and 19 with the large block orders. Move that triangle over just a little bit more to the right, Bruce, and you can see the large block orders. Bookmap is showing you the large orders in the current order book. Yeah, see?
Oh, this one here, right? This is what you're talking about?
Yeah.
Okay.
Yeah, but look in the column, and you can see the large block order. So there's a lot of liquidity there, and there's a lot of size in the order. Yes, sir.
Yeah.
Did it go to Boho? Did it go down? because that's influential, right, to the downside. I don't blame you
Yeah.
for everything you did here. I think you made great decisions. For taking the order off, no question about it. But that does present resistance up there between 18 and 19, right? Did it go down?
No, it didn't go down.
Okay.
As you can see, we're approaching European close. After that, it really didn't go anywhere, and the
Yeah.
live webinar also ended. And
If it doesn't go down, that'll go away. But yeah, okay.
yes, yeah,
hmm hmm
yeah.
Yeah. It's
Not the best. Well, I'm sorry.
no, go ahead, John. I'm sorry to interrupt.
Not the best trade, but you managed out of it very nicely, and that's really that's a success, right? Um, you gave it a shot, and you managed out of it. So yeah, Bruce.
Yeah, that's a great point because and then looking in hindsight, Taboho, like you mentioned in here, well, hold on, I got exhaustion in here, and I'm in this, and like okay, it did retest back up in here, but or down here, with some volume, but you you didn't like it. And going back into these nuances, even like in forward testing or real time, it's like, hey, the setup may be changed. You don't like it anymore. Like, just get out of it. You know, take the good ones. Stay in the good ones. So there's a lot of volatility in these markets right now. They're not making a lot of sense.
Yeah.
And like John had mentioned, look at the skew is just massive. But this is very typical behavior at the close of something or during like some sort of volatile event, and it can be really kind of confusing, I find. And if you don't really see something clear, I think the right thing to do is just get out and take another trade. Wait for something better. You don't have to be stubborn about it. And that kind of flexibility is something as retail traders, it's our edge. So we can get in and out of things really quickly, and we don't have to take the heat like that. Taboho, like, thank you for sharing this because, like you said, it's not the greatest trade, but there's a lot to learn from and go through here. Yeah, again, I can just compliment on all the work that you're doing.
Yes.
Really
Yes,
great, really great stuff. Any other coaches' comments?
Low volume pullback on balanced days, man. They are brutal. I just get murdered. And or another thing is adding. There one regime I'm adding and it will work out, and then the regime switches on me, and I'm adding in a balanced market or something, and I just get murdered. You just have to recognize it as quick as you can. That when these things but in the final hour they might have a higher probability of actually working out, but just be cautious of it. You might find that it the low volume pullbacks and adding to trades. I know you don't add to trades, but it's just it's very similar to like the low volume pullback where you're expecting extension or an extended move. A lot of times it's better just to in my opinion, this is how I trade is I'll try to I'll just take the profit. Like if I have a trade, let's say I faded this or whatever, and it goes to the inside, I'll take my profit instead of trying to extend my targets. um I'll lucky I'll be I have to view it in a different perspective. I have to view it like I am lucky to get my target in a balanced market.
Yeah, I don't know if we want to open this up as kind of a bigger discussion on like right now in this market. Like to Boho, I think you made a good decision here, and this is trade management in here. Something wasn't right. you aggressively managed it and dealt with it. Good, quick decision making, and the what I wanted to get at was if you are in this environment, like and you like the learning part of the learning process is like being able to just like save your ammo, save yourself, instead of being headstrong and like, no, I saw it, this is my setup. That can be a harsh lesson. And I'm not saying like bail out at every trade or whatever, but like, you start to notice like it's not right. This is not what I've traded in replay. This is not what something's off. And then go back and then learn from this. And I think that's it's easier to learn from. And I don't know if you guys have any kind of comments on that through the process of learning and going through it, or maybe it's the hard knocks that typically are the best lessons, to be honest. But yeah, I don't know if it's. I open it up for a discussion if you guys are game for something like that. No, okay. So that's fine. That's fine. Let's see. Got another one from Taboho, and let me go through. Who else do we have in here? I think this is everybody's sheets this time. I had Jimmy, but Jimmy's not in today, so we will go over his trades. Let's see, so we have another one here from Taboho. So let's do it, and then we'll wrap it up here. So all right, so we got a trend line break accumulation. Okay, so market's coming down, and we get this kind of pullback in here, and you drew in the trend line at this point, and we get the passive accumulation, and you get the break of structure, you get the break of horizontal structure as well, and you get in here, and not a bad place. I mean, I would say this kind of looks a little bit late, but I know that you've been working on that, Taboho, a lot, and you've really been doing well. This looks more like a NAN entry, in fact. You've got some wind at your back here on the offer. You get in, you've broken the structure, you're kind of riding the momentum at this point, and the liquidity there's some here, but most of it is down here. So you were getting it. This is exactly what I mean by pilot program and the feedback from coaches about not taking, or you adjusted Taboho, and before you were taking this into high liquidity, you'd take this trade, and then you would get kind of caught in this, kind of back and forth in here, and then it might work, or it might stop you out up here. But here you got some room to run, and you took advantage of it. So great stuff. Taboho, I'll let you get in here.
Yes, thank you very much, Bruce. This is one of the trades I was happy with. I think because what I did was to wait for the break of the horizontal structure, and especially at a key level. That's what convinced me that the transition is taking place. And then I moved in decisively. I usually would wait for a pullback, especially for TLBA. I've learned that it's usually better to wait for a pullback. But in this instance, when I saw that I was not getting any pullback, and then I looked for these two elements, that it has broken the small structure, and it's at a key level, and I could see the liquidity down there. So that's convinced me to go in, because once I see the liquidity on target and the volume coming in, then I have more confidence that the trade is going to work. And I think also what I'm not sure if I'm reading it correctly. The delta column, I inserted it
This one.
recently. This one, yes, that column. I've done pretty well recently since inserting that column, because I'm able to see whether are there any buyers down there that would potentially reverse the trade, or it's only the sellers that will keep pushing down. So this was one of my confidence, but it was only after I entered the trade that I could see that it is the buyers only. There are no sellers at all. That's why I let the trade run, and but then I adjusted it to the next liquidity, and it was filled. I was happy with this trade, and especially the aggressive accumulation at the bottom, which clearly provided a justification for the trade. Yes.
Great stuff.
Thank you. Yes.
Coaches.
Well, I'm glad to see you're using the delta column, because what that does for you, Taboho, is like at the bottom of the chart where we often see the transition in volume from net buyers to net sellers. You can see the same kind of transition occur on the vertical axis using that delta column. That's what that does. And you can see right where the pointer is that it went from, a mix to just full scale selling. And that should add to your confidence. Absolutely. That's a great way to use that column. I know it's very valuable to me. It also enables me to see at the top the possibility of some trapped buyers. Exactly. Yep. Right at the, that passive accumulation, they're buying, and then you see the reversal. And oftentimes that'll mark that transition, which would be just above 77.9850. But here's my question. Beautiful trade. Your markups are wonderful. Your explanation, except the volume profile, you never mention them, and they're not highlighted. What does that do for you? Why is it there?
The volume profile on the extreme right, or this one, Bruce is highlighting.
Yeah.
On the left. What I mean, how do you make a decision off of those? I just want to know what that tells you, in addition to what you've described, because like I said, you haven't mentioned it. I know I'm throwing you a curve, but you're ready.
Yes, is the value areas. I think they are very helpful for me, because I've usually observed that, especially when there's been time of acceptance, that the trade would normally not move either above or below. So the trade would stay within the range. It would only move outside that range on high volume. So that's how it helps me. Like in this instance, you could see that the sellers move was at high volume, and it went through that white line area, which is, I can't remember the name of the white line, but these are like the high value areas. Yeah, these like the boundaries of the move, and where most trade has happened. So I use that quite a lot. It's one of the add-ons that has really helped me in reading the order flow, because I like them. It's within the chart. It's within the heat map, so I don't have to look anywhere else. I stay within the heat map. I can see the order flow coming in, and I can see where it has been most accepted. I can see the shape of the volume profile, whether it's balanced or there's a skew. Yeah, I'm able to read that. I really like it. That's how I use it. But I usually don't refer to it when I mark up my charts. I just stick to the elements of the setup. I'm not sure if I'm answering it, John.
John, you there?
I'm sorry, I was on mute. Yeah, the reason I asked that question is because your target initially was outside that range, and I'm just wondering how that, if that creates a conflict. You have your value area low at 91.5, but your target's, down at 88. I mean, in real time, how do you reconcile that? I mean, um, I don't know. It just, when I have things like that on my screen that are um, opposite to the flow, it can add confusion rather than clarity, I guess is my point. I'm just wondering, do you just um, look past that and allow liquidity and volume to take precedence over that white line, over that value area low?
Yes, I do,
Okay.
especially on the time of day,
Okay.
as you could see. Yeah, they are usually, but during the initial balance, I think that's where I use it mostly, during that
Okay.
initial balance, because I have seen it's very effective. I
Okay.
really can't place anything beyond those value areas within the area of initial balance. But once it breaks out of that, then I know that well, yeah, it will play outside of those areas sometimes.
Okay. All right. Well, thank you.
Yes.
Yeah,
Bruce?
I'm a bit to blame on that one. I'm to blame on that one. I've been showing it a lot, John, and the reason that I've been showing it a lot is as a filter for more structure, because a lot of traders look at it and trade off of it. I think Taboho's answer was excellent. This is a balanced area in here in the profile. Now there's all sorts of imbalance, or there's a balance up here on the smaller time frame, and he's trading that away from it. There are I do agree that it can add to the confusion, because here's the point of control. What do you do? Maybe just, it's like your VWAP that you mentioned earlier. You're looking for maybe if you find liquidity here, or you see a lot of liquidity here, then maybe that's where you decide to take some profit. It's just outside edge to inside and get out. But in this case, there's a lot of volume coming in. You can write it back down to now. This is a percentage thing, and I might be a hypocrite here. So look at these areas, but I think this is structure. This is structure, horizontal structure, and align it with liquidity, align it with swings. I think that's where it can be helpful. If it is confusing, then take it off. But because the purity, I think where you're going with this, John, is the purity of the trade is all in here. We don't need the profile for it.
Yes.
And I agree with that. It's a beautiful trade, beautiful target, beautiful trade management. Everything that you mentioned, Taboho, was excellent. I especially really like this, and it's driving away. So anyway, my goal with at least for the education part on this is more of a filter on higher time frames, not necessarily adding to the setup. It's not a part of the setup up here. So that's the way that I've been that's the way I've been covering it.
I see.
So I hope that makes sense. I hope it's not confusing.
Yes. No.
Coaches, any other comments?
I just want to note that target liquidity that broke where he took his exit is sitting right at that trendline pivot low. And I know our order, we're going to look to our order flow and our liquidity, but structurally, that opposing pivot, the pivot low in our short or the pivot high in our long, whether it's the TLBA or the 123 reversal that I post, that's a very important level that I keep an eye on for a price to target and possibly roll over at.
Yeah, you've looked at that for a long, long time, Shark. That's a good one.
Yes.
Okay, any other questions or comments? No? Okay, well, thanks, guys. I know we missed last week's. I'm sorry about that. There was a whole host of things that were kind of happening that the coaches couldn't make it. We didn't have, Dan was away and decided to cancel. Sorry for that. But anyway, we're back. Thank you, coaches. Thank you so much. Thank you guys for your chart markups. I'm debating about tomorrow's webinar. I might not present. I want to finish up some of these things in the pilot program. I got a feedback from the team and some things to kind of shore up on my end, and then we can get you guys. Some of you guys in here in the pilot program, you guys will be beta testers, or check it out and give some feedback, and we'll make some adjustments to it. Anyway, I'll let you guys know tomorrow, but that's kind of what I'm thinking is we'll probably cancel tomorrow's All Markets webinar. Anyway, let's see. D&T, do you want to take us out, please? Last word.
Sure. Just the Tommy had a question, which was to Boho, asking if he had a plan or like a pre-market plan in the morning when he comes in, and it helped him a lot. And I just will probably just leave off with that, which is I just want to encourage everybody, if you guys have one, go ahead and just post it in the academy. I just want to see them. And if you're doing them, it's just take a screenshot, throw it in there. So it's all part of the work, and I think it'll help you guys out if you're not already doing that.
Yeah, actually, D&T, I have one that I'm going to present for the pilot program. It'll be in the process.
Oh, I see. Okay, cool.
So let's let's hold off on that for now, and I'll cover it in some webinars for pilot program webinars, exclusive webinars.
Okay, sweet. So
yeah,
I'm excited for that then.
Yeah, I've gotten some really great feedback from you guys about chart markups, how to mark up your charts, like we talked about with Nan and John. Also, D&T, your chart markups are just excellent, and with intent, right? And Vinfra as well. But we don't want to, we don't want to drive ourselves nuts with this. I think getting into really don't overwork it. I think Taboho, Tomi, also good examples here. Keep it clean, clear, and edit it out. Get down to the essence of it. I think that'll be the most helpful. Anyway, D&T, you have the closing remarks. I'm sorry, I interrupted.
No, you're right on. I mean, I was just excited. I'm excited to hear it, because that's where I think a lot of people, especially in forward trading, it's going to help out a lot. I don't really have too much to say. I mean, when you're practicing in replay mode, we were talking about trail stops a little bit, and taking profit at a certain place. So I see behaviors in these replay posts that we've been looking at, and they're all very similar, and they're all very much the same. Sorry about that. Where we try to extend our take profit, and we're trailing a certain way, I'd encourage you to try something else too. Try to just take the profit sometimes, instead of trying to extend your take profit, and because you might feel a little bit more comfortable just actually taking profit sometimes at your declared target. You might feel more comfortable, and then when you get to the live market or forward trading, you can decide whether you like to extend your take profit, let's say just because you think it's going to go a little bit further, or in the live market you decide, I'm just going to take my profit because this is how I actually felt better. This is how I feel. This is how I felt good in replay mode. Just wanted to throw something out there, throw a curveball is all.
Okay. Thank you, everybody. Thank you, coaches. Thank you, traders. And we'll see you in the next one. All right. Have
Awesome.
a good
Thanks, Bruce.
have a great day or evening. Bye bye.
Bye, everybody.